Robinhood, fourth quarter earnings, they are just now crossing the wire. Let's get you those numbers. I see Q4 EPS of 66 cents. I don't see a comp for that yet. Q4 net revenue, though, let's look at the top line, $1.28 billion. The street was closer to $1.35 billion. Transaction-based revenue looks like it also comes in a bit light versus consensus, $776 million. Analysts had been expecting more like $791.6 million. I'm just looking for crypto revenue. There it is. Q4 crypto revenue, $221 million. Consensus was closer to $248.2 million. Options revenue, $314 million in the quarter. The estimate was $331.2 million. 2026 adjusted operating expenses, the forecast for operating expenses in SBC is $2.6 to $2.73 billion. At least initially here, you can see the stock, we're down a quick 8%. Now remember, heading into this sprint, the stock had been interesting. You were still up about 50% over the past 12 months, but you were down heading into this print about 40% from the all-time high last October. You got some big questions front and center for investors. The impact of this crypto winter we've been talking about, what does that mean for Robinhood and its financials in the quarters ahead? What is that going to mean for trading volumes? What's going to mean for EBITDA? Questions around that options trading business. That, remember, is the company's largest business, so there'll be lots of questions about what are the catalysts still ahead there. So we are down here about 9% now in the after hours. Analysts, though, it's worth mentioning, still very bullish on this name. More than 80% of analysts still do tell their clients Robinhood is a buy. Robinhood shares sliding here as fourth quarter revenue missed expectations. Joining me now is Christian Bolu, senior analyst at Autonomous Research. Christian, it's good to see you. So Robinhood reports we're down right now, nearly 8% in the after hours. Christian, what do you make of the print? Your first thoughts?
Yeah, afternoon and evening. Thanks. Good to see you. I would say, look, an expensive stock and, a top line miss is not helpful at all. Also, there was some deceleration in some key metrics. Things like the net deposit growth decelerated in the fourth quarter and looks to have continued to decelerate in January. So I do think the reaction might be warranted here, just given high expectations and I would say obviously a very expensive stock. That being said, the commentary from the management team is pretty constructive in terms of the pipeline for 2026 in terms of new business growth, and actually transaction volumes have been very strong in January as well. So the outlook here is actually pretty decent.
Let me ask you, Christian, heading into this print, the stock was already, it was off about 40% from that all-time high in October. And a big question, this, of course, for investors right now is they're trying to gauge how this company is going to navigate, Christian, this crypto winter, right?
Yeah.
This route in Bitcoin. You know this company backwards and forwards. As an analyst, how do you think about that? What is it going to mean, Christian, for Robinhood's trading volumes, for EBITDA? How do you model it?
Yeah, so crypto has fallen as a percent of revenues. It's come down from north of 20, and over time we think it would be near a 10% of the business. If you run through what a crypto winter would look like, so if you look at where trading volumes troughed in 2022, 2023, it would imply something like a 50% haircut to current trading volumes. If you run that through the P&L, it's only about a 10% hit to Robinhood. So Robinhood's EBITDA. So not great, but completely manageable. In fact, over time, we think things like event contracts and prediction markets will be a bigger part of the business, and than crypto. And obviously, the actual biggest business, which is options trading, continues to do extremely well, with really strong volumes or record volumes to start 2026.
Christian, would you argue that Robinhood, are they in any way better positioned during this Bitcoin drawdown than prior drawdowns because they've diversified the product lineup or the regulatory backdrop? I'm curious to get your thoughts there.
Yeah, it's definitely a different winter. I would say we are surprised about how severe crypto prices have come, given we should have a more constructive backdrop for crypto. And so it's been somewhat surprising. But from a business, from Robinhood's business perspective, they're definitely better set up. This is a much more mature company, a much more diversified company. Not just in terms of it's the types of transaction businesses it has, but also just the types of businesses it has. It has a net interest income is a much bigger part of the revenue stream. They have things like retirement, launching a banking product with credit cards. So this is much more of a money app that is in many, many businesses and way more diversified than in prior periods. And just from a business perspective, better managed, more disciplined on expenses, very profitable company. So all these things set up the company very well for, let's say, a crypto winter.
What about options trading, Christian? Because as you know, listen, biggest business for the company. I think it's something like 25%, Christian, of revenue. What are the catalysts you see ahead for that business?
I would like the businesses a lot here. So options, for the most part, have been options penetration, i.e., just how many options have been used relative to the underlying equity market, has been growing for the last 30 years, and has only accelerated in recent times, partly because of firms like Robinhood that have made it easier to use and understand and increased accessibility. Also, products like zero-dated options that give you much more precision around risk management have also driven significant adoption of options. So we did some analysis on this, and we think you could see something like 40% incremental growth in the options business because of all the penetration we're seeing, the new products, and a normalization of what we call options penetration. So, pretty constructive on options. And as I said, that's the biggest business. It's less cyclical, believe it or not, because people can trade options in up and down markets. It can be used to generate yield. It's a very flexible product. And Robinhood offers basically the best value. They charge the least relative to the bigger players out there. So there's a value prop from using the platform. There's a great UI, and the underlying market is growing very fast. So I think a really good business for Robinhood long term.
You mentioned, Christian, the company's moving to prediction markets. How confident are you about the growth story there long term, Christian? Especially, listen, they certainly have plenty of competition, right?
Yeah, it's a good point. So there's a lot of competition. The good thing about Robinhood is their value prop from a business perspective is the distribution. There's not many folks that can distribute or have the distribution that they do. So there could be a lot of competition around the products, Kalshi, Polymarket, the exchanges. Everybody can launch their own product, but they all still need the pipes to distribute that through. And that's where Robinhood really stands out. It's not just that they have the numbers, they have the type of customers that really, where prediction markets really appeal to. And you see it in the numbers. So despite the increasing competition, I actually see Robinhood coming out as a winner here. And if anything, they can actually monetize better over time as they build their own platform, right? They just announced a partnership with Susquehanna that gives them much more control of the economics, gives them much more ability to be faster around product innovation. And like prediction markets are tiny relative to broader futures markets, broader options markets. So the pathway for growth here is pretty significant.